Hi traders, this is Roberto, and again this is a continuation of heiken ashi workshop part 3, and today we're going to focus on top-down analysis, and I've also added an Ichimoku cloud indicator. And the way we use the cloud is, it's quite simple, is when price is below the cloud we're in a downtrend, when price is above the cloud it's in an uptrend. So using a combination, a heiken ashi, Ichimoku cloud, and stochastics indicator, we should be able to find good trade setups if we just qualify the trades on different time frames. So we're looking at Australian using out of Australia that pushed price down even further. And it was in the direction of the general trend. So if we look at a daily chart, we know that price is below the cloud, and we have more red heiken ashi candles than blue, so we're obviously in a downtrend. So then I would go to the 4-hour chart, and let me just highlight this whole area because this is important to know that this whole area that we see, not only on the 1-hour but 4-hour chart, price is below the cloud, and we have more red heiken ashi candles blue, hence we have a downtrend. So let's look at the daily chart again. So this whole area that is shaded, let me just bring it all the way up here, downtrend on a daily chart. Let's go to the 4-hour chart, and we're in a downtrend as well. So we start looking, if we know we're in a downtrend on the 4-hour and daily chart, then what we do is just simply go to the 1-hour chart and start looking for areas of resistance so we can short. If we know that the market's in a downtrend, so what do? I start looking for stochastics indicator to be overbought. Here is one example, and here is another area right there, and here is another place we could have entered a short. Remember, the 4-hour and the daily chart are in a downtrend, so what we do is start looking for areas of resistance on a 1-hour chart to maximize profit. And when stochastics indicator is overbought and we get a change in color on heiken ashi, then that is our signal to take a trade in the direction of the daily and 4-hour chart. Quite simple. Let me just zoom in so we can look at some of these trade setups. Okay, here is one trade. The market obviously is above the cloud on the 1-hour chart, but it's below the cloud on the 4-hour and daily chart, so we know that all we need is a color change candle on the 1-hour chart and we can take a trade. And there's your trade. Even though it's above the cloud, eventually it turned around and went in the direction of the 4-hour and daily chart, but we still have stochastics overbought on 1-hour chart. And let's quickly look at the 4-hour chart and see where stochastics is. If you remember the last tutorial, we talked about when stochastics indicator on the 1-hour and 4-hour chart match, that's a very good trade setup. So here we've got an excellent trade setup because we have stochastics overbought on the 1-hour and 4-hour chart. This shaded area represents the overbought stochastics indicator on the 1-hour chart, also overbought on the 4-hour chart, and you could have just waited for the 4-hour candle to turn red, and that would have been okay. But you would have missed out on a huge, well, here wasn't that much of a huge amount of pips, maybe 20. So let's look at the 4-hour chart again. The arrow is pointing to this candle, but this is a 4-hour candle, so you actually, if you would have waited for the 4-hour candle to close, you would have to take a trade on the next candle, which is fine. And let's see what that looks like on the 1-hour chart. And the market didn't really move that much, so it really wouldn't have mattered. What matters is that you're taking a trade in the direction of the daily and 4-hour chart. This is so essential, it's so important. It's called top-down analysis. Make sure that the daily and 4-hour chart are identical. Either they're in an uptrend or in a downtrend, and then go to your 1-hour chart to enter the market. So you want to see candles turning red in the direction of the daily and 4-hour chart. Okay, we're looking at a gold chart. And this is a daily chart, so we know that there's more red than blue candles from here all the way to here. The market continued in a downtrend. Now we had a little bit of a retracement on the smaller time frames. It may have looked that the market was turning around and heading north, but if we look at the daily chart, we're still in a downtrend. Price is still below the cloud. Let's look at the 4-hour chart. Price was above the cloud on the 4-hour chart, so we couldn't really take a trade based on the daily and 4-hour chart. So here's another trade setup on gold, and this is an example why top-down analysis is so essential, is so important, because you don't want to take a trade based on a smaller time frame if it's in conflict with the daily chart. You can, but it's short-lived, and I would consider just that a scalping opportunity, and you have to be careful not to stay in that trade for a long time. So if we look at a daily chart, price is below the cloud, and we have more red candles than blue, so we're in a downtrend. But if you notice this level here, the market started to find support, and on a daily chart it turned blue and put in over 431 pips. Now you would think, well, and I should be buying. And you can't do that because price is still below the cloud. So if you look at a smaller time frame, 4-hour chart, you would think the same thing. Price was above the cloud on the 4-hour chart, but not above the cloud on the daily chart. So unless we have a daily and a 4-hour chart that look similar, they're mirroring each other, we've got to be cautious about taking a trade buying gold if it's not supported by the daily chart. And look what happened. Market just turned around and gave back all the gains. It put in about, 480 pips, I believe, and then it gave it all back. So the market went up, it stalled out, and turned around and went in the direction of the daily chart. And I would have traded this on the 1 hour, noticing that I know that the daily chart is still in a downtrend, and this was just a correction on the 4-hour and 1-hour chart, and then I would be looking to sell on a color change candle on the 1-hour chart, and the market went down about 330 pips from, or I think this started around the London session today. So that concludes our heiken ashi strategy workshop. Just remember, you do always remember to do a top-down analysis. Look at a daily 4-hour and 1-hour chart. The best trades, of course, is when price is above the Ichimoku cloud, and we've got bullish heiken ashi candles on all time frames, on the 1-hour, 4-hour, and daily chart. When we don't have that, when we have a conflict, when we have, for example, here is a good example on euro pound, when on a daily chart price is still below the cloud, but we do have blue candles at the moment, but we're still below the cloud. So this is a retracement. If we look at the 4-hour chart, price is above the cloud, but remember, it's not above the cloud on the daily chart. So we have to be careful about staying in trades, even on the 4-hour chart. And what I would do is, if the 4-hour chart and the daily chart are in conflict, then I would start looking for trades in the direction of the 4-hour chart, but I would not stay in for more than a day. So for example, this trade is, we're in an uptrend on the daily and the 4-hour chart. And remember, when there's no shadows on the bottom of the candle, the market is very strong, it's very bullish, so we would take this trade going north. And then here, the same thing, the market turns around and retraces. Stochastics is overbought on the stochastics on here at 80. We get a color change candle. Notice that there are no wicks on the top of these candles. This is a very strong retracement. And market recovers, turns around, heads north, but does not penetrate the swing high. And now it's starting to retrace. And I would actually take a trade going short here because it hasn't broken the swing high, and we have a lower high, and we have a color change candle. So I would consider taking a short right at this candle and maybe write it down to the support level here. Okay. So that concludes our tutorial, part 3. If you have any questions, please email me. We offer private coaching sessions, 6-month-long programs, very affordable for $9.97 a month. Just check out our website and sign up today, and you will receive videos like this one, very similar to this one, trade signals on a daily basis, and I'm available 24/7 via email. So email me, see if you're interested, and have a good week trading, and thanks for watching the video.